Welcome to AM Best Audio.
Various economic and business trends could cause a shift in the private management liability market late in the year into 2025. I'm John Weber for AM Best Audio, and we're at the WSIA conference in San Diego, and I'm speaking today to Marcia Blanco, Head of Financial Lines at Munich Re Specialty. Marcia, so glad you could join us today.
Thank you, John. Nice meeting you.
So Marcia, what are some of the key trends affecting directors and officers or D&O insurance and management liability risks?
Well, John, given the recent trends right now, there's two I really want to focus on. The first one is really regulatory claims, which do affect many industries, and they are more severity-driven than frequency-driven. As a result of this, the cost of defense costs have risen through the roof. A lot of companies are facing some serious issues. However, some conservative judges have been pushing back on regulatory actions, and I think this is what's going to help us. We need more of this, as courts need to decide legal questions on regulations. If there is no legislative action, it's going to impact other areas. It could cascade into the FTC, FTC, and EPA. The other area that I think is important, and we don't give it a lot of credence in my mind, is the return to office awareness of social behaviors. While the financial benefits returning to the office are really great, there's a statistic that says about 72% revenue increase after return to office mandates were implemented. However, because people are returning back to office, social norms are in play, right? There's been a lot of people who are out of work, and we have a lot of Gen Zers that have entered into the, working arena, and they didn't know what it was like to be in an office. And a lot of these Gen Zers have, I'm going to say, very passionate views, whether it's culture, political, geoclimate, you name it. They have very strong opinions. They bring those into the office now, and with those more established baby boomers, which, by the way, about 11,000 of them are going to retire by the end of 2024, and the Gen Zers are going to overtake those positions, there could be some conflict. If leadership allows this to continue, or condones some of these misunderstandings, it could lead to claims, right? So we could see our EPL claims rise as a result of this. We have to be a lot more cognizant of it. Their D&O insurance could go up, retentions can go up, and possibly some changes into their risk management would encourage others to do well. The other area that's really important as well, while we're talking about social norms, is this call for diversity on the board. There's been mandates about it. Well, we have to be very careful the way we promote. And I think that's another area that needs a lot more work in, so that especially now that we're going back into the office, that we do normalize it to the benefit of the company, not just financially, but also the diversity and culture of the company.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
I want to ask about economic issues, macroeconomic issues. We just had a half-point rate cut last week from the Fed. Will these macroeconomic issues have an impact on D&O?
So let me just do a little history here, right? So pre-pandemic, there were a lot of companies already that were in trouble. Some of them were very sound and were able to weather the storm. Post-pandemic, we've had companies that received some assistance and were doing okay. They were just floating. Their cost of goods, though, also rose. So they were taking on additional debt in order to meet the production that they needed. But guess what happened? Their profitability suffered. We are going to see a benefit of it if it continues, but we have to be careful not to overcorrect, right? We're really in a balancing act now. We don't know that dreaded word recession is coming, but at the same token, we may be fine. So it's a fine line. I don't think yet we're going to see it, because it depends on if people believe it and start to invest, if PEOs can get backing, if a lot of private companies who were supposed to do IPOs in the past and now are able to do it because they've held off. It depends. There's a lot of dependency on what is. It's really unknown at this point.
Let's talk about mergers and acquisition. First of all, what sort of M&A activity have we been seeing, and how much of an impact is that having on the insurance industry?
So that's a really great question. Right here, right now, the issues based on the merger and acquisitions environment is pretty thin at this point. I think it will get better as time moves on. Like I was just mentioning before, if there's confidence in the market and these rates really start to even decrease further and there are more IPOs. But there's three major issues that we have to look at. The first, as I mentioned before, the portfolio companies on the PE side, a lot of them they're coming up, right? Debt is coming up. Can they pay them? Are they able to acquire companies? But a lot of them don't have exit plans, and they're struggling to make their payments. Nobody else is going to buy them because they're too expensive. The other part that they can do is they can reprioritize their debt, but on higher interest rate, which then makes them even less attractive to be acquired. So why would somebody acquire or merge with them? Right? There's probably even more fundamental issues within the company if you're already experiencing that. Secondly, the M&A activity tends to move risk from the admitted market to the E&S market. Again, as I mentioned earlier, if you're forestalling or if you are awaiting your interest rates to go down so you can make a move, a lot of these private companies have postponed their IPOs for the last 3 years. We thought a lot of companies were going to be going public, and they did not. So what happens there? The private market stays in the admitted versus going into the E&S market, which is where we see a lot of this M&A activity. Lastly, technically, this is a really interesting point, and when I was thinking about this, while it's not a technically M&A depressed IPO market, it results in some companies staying private longer. But the other part of that is that we're not seeing the bumps that we used to get in the past when we had transactions that related to runoff business. So we're not seeing the premium from runoff business because they're going from a private to a public.
Sounds like you're not expecting a lot of M&A activity as we move into 2025.
Not yet. No, I don't.
Marcia, we covered a lot of ground here today, so I got to ask, what are you keeping your eye on?
Sure. The first one is the FTC ban on non-competes. The non-compete agreements have been in source of D&O claims, many of them in the mid to high six figures. While the FTC ban looks promising, we still don't know. There's still a lot of confusion in that area. In the meantime, these claims will likely continue. The second one is the new commission rules in commercial real estate. It just went into effect, and there's still a lot of uncertainty how it's going to apply. And some people are very unsure how it's going to affect the real estate market. Some believe that it's not going to alter it at all. Some others believe that the housing market prices will go down. We have yet to see, but we are following those too.
Marcia, so glad you could join us today.
Thank you, John.
That was Marcia Blanco, head of financial lines at Munich Re Specialty, and I'm John Weber for AM Best Audio.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.